Hi, my name is Jordan Brooks. I'm Senior Market Analyst with ALN Apartment Data, and this is our Takeaways series where we discuss the most recently published newsletter that ALN puts out every month. This month, the newsletter was a topic that I don't think we've actually done before. It was a look at the new construction pipeline, but from a little bit of a different perspective. What we did was we took basically 2-year time periods and looked at what was the pipeline sort of at a snapshot moment in time at the beginning of that period, and then what did the pipeline look at the end of the period. And the idea was to look at how projects are progressing through the pipeline within those 2-year intervals. And so we started with 2018 and 2019, and then we did 2020, 2021, and then finished with 22 and 23. And so, obviously there was a lot to talk about with a topic like that. It's fairly broad, and, there's a lot to get into sort of on a granular level there. So there were some things that we just didn't have space for in the newsletter itself. And one of those that I wanted to spend a little bit of time on today was the fact that in 2022 and 2023, so again, that 2-year period taken as a whole, despite the fact that multifamily performance metrics were soft and softening during that time, we saw a higher rate of projects, in fact, converting from planned to under construction, which maybe seems a little bit counterintuitive. You would think that as conditions are softening in the market, we might see smaller share of projects actually begin to break ground. And so I think, there was some talk about decision makers in the industry maybe mistakenly believing that 2021 represented kind of a new normal in terms of the demand that we saw and the rent growth that we saw. And there may be a little bit of truth to that, but I think there are other explanations for why we saw so many projects breaking ground in this period where the market didn't look great. And so in my view, I think a lot of that had to do with the disconnect between backward-looking performance metrics for the industry and conditions on the ground at the time. And I think 2022 provides the best example of that. So apartment demand that year was not only lower than it was in a historic 2021, but it was actually significantly lower than sort of the normal range from the pre-pandemic period. And that poor annual net absorption total in 2022 was not just the result of a few bad months, but rather net absorption was unusually low basically all year in 2022, starting in January, going all the way through December. So what made it interesting and unusual was that despite poor absorption, average occupancy was still quite high. And that was thanks to the demand that we saw in 2021. So the demand that we saw in 2021 sent occupancy up well above its normal range. And in 2022, that leftover occupancy was still there. And so even though absorption was tepid, the occupancy numbers looked good. Also, that high average occupancy allowed rent growth to outperform maybe what would have been indicated by the absorption data. So national average effective rent growth for new leases was about 8% in 2022. And again, that's in a year in which occupancy was declining all year and absorption was fairly poor all year. And so you had a situation though, where if you were just looking at the current occupancy, it looked good because again, we were coming down from a peak. Rent growth looked very good. 8% is double or a little more than double a usual year. And some measures of absorption looked good because if you were, for example, in June of 2022, looking at a trailing 12-month absorption number, it looked really good because 6 of those 12 months were 2021. And that 2021 demand was padding that number well into 2022. And so all of that taken together, conditions looked good from a certain perspective for new projects to break ground. And so we saw sort of, full steam ahead on these projects breaking ground, despite the fact that, again, other metrics didn't look so positive in 2022. And just as sort of a little shameless plug here, ALN was warning about a lot of this as early as the first quarter of 2022. And those articles are still up on our blog. So go check those out if you are interested. Also, something that got mentioned briefly in the newsletter, but I wanted to expand a little bit on, was the fact that despite there being a huge number of planned projects to start 2024 in the pipeline, there are already signs of reduced future supply appearing, and that's aside from the coverage we've seen of a decrease in permitting and a decrease in starts that were a little bit more specific to the data that we were covering in the newsletter. So about 130 planned projects that began 2024 in the pipeline as planned have already dropped out of the 2024-2025 data set. And what that means is, again, we're looking at sort of 2-year tranches of data. If a project gets canceled or if the construction start date, the estimated start date, gets pushed back beyond the 2 years that we're looking at, it just falls out of the data. So for projects that are in the 2024-2025 pipeline, those projects are expected to break ground sometime before the end of 2025. If a project gets delayed and that start date gets pushed beyond 2025, it just falls out of the data. And so that's an indication to us of how many projects are being canceled or significantly delayed. So again, through July of this year, in just 7 months, we've had 130 projects nationally that fall into that category. In the previous 2-year period, so 2022 and 2023 taken as a whole, there were about 270 projects that fell out of that data set. And again, that was in a full 2-year period. And then in the previous 2 years, so 2020 and 2021, about 235 projects dropped out. So in 7 months so far of 2024, we already have roughly half the number of projects canceled or seriously delayed that we had in the last 2 full 2-year periods. So we're seeing a dramatic increase in the rate of projects that are falling into that category. And that's something that we would expect to continue and maybe even increase as we move towards the end of the year. And so with that, I just wanted to mention, normally we wrap these up with some upcoming events. I have a baby on the way next month, and so my schedule is temporarily slowing down. So not much to report there other than our other very talented analyst, Theron Patrick. He will be pinch hitting for me at the Austin State of the Industry on September 12th and doing a presentation there on what's going on in the Austin market. So if that is a market that's relevant to you, be sure to check that out. Details will be available on our social media channels. On that note, search for ALN Apartment Data on your social media platforms of choice. We're on just about all of them with great content coming out all the time. And I already mentioned our blog, alndata.com/blog. In addition to the newsletter that we put out every month, we do put some additional articles out each month on the blog. So check that out as well. And with that, I will see you next month. Thank you.